Welcome back to Tobago. I'm Hema Ramkissoon sitting in for Jason Williams this morning. And today we're switching our focus to financial services, specifically those being offered by the UTC. And our topic today is investing and millennials. You know, young people tend to think, I have forever. You know, I have a lot of time relating. I have a lot of time remaining. I don't know what to do with my money. Maybe I'll do the needs once and then save later. Well, Desiree, Hackett-Murray and Dexter Sandy are here on set with us here on The Morning Brew. Good morning. Thank you for joining us.
Good morning. Thank you.
So, Dex, let me start with you on the first idea of millennials and investing. Why is it so challenging for them to get it right?
Well, first off, let me just start with who is a millennial. You know, a millennial by definition really is that person who would have been born within the early 1980s, late 1990s. So for those of you listening at home right now, you're within the age bracket of probably 28 to 44. This session is really for you. Yeah, and millennials, they face a lot of challenges. Life is happening. Yeah, they may have just started a family, or they're adding to their family. They may be purchasing a new vehicle, changing out the old vehicle, home acquisition. They're moving from a state of renting to probably purchasing a home. And that's life. This is life happening for them. And so they may be in between minds, do I really have the time to save and invest? And I think this morning we're here to share some information and knowledge as to say to you, yes, now is the time. Unit Trust Corporation is here to help and guide you through that process.
You know, I spoke about most people think that they have a lot of time. So you talk about needs versus wants. What are some of the challenges when people think that I don't have the time, I don't have the money, I have my car payments, I have my school loan, I have my child to pay for, I have a newborn, which is the things that I think about now. What are some of the challenges?
So, I mean, you listed some of those challenges. So they want to they are dealing with inflation, continuous high prices. And those challenges, naturally a millennial would think, why should I prioritize saving and investing amidst these challenges? And most of us have the experience of thinking, I would like to walk into a store and purchase an item without asking the price. Have you ever experienced having your vehicle engine seized up, but you're able to have it repaired immediately without maxing out your credit card or having to borrow to fix it? Or what about unexpected expenses where your wifey or girlfriend come upon you to say, babes, I'm pregnant? Unexpected expenses. Flooding happens ever so often in Trinidad, and these are expenses that a millennial will encounter. Now think of the freedom, the financial security you have if you prioritize saving and investing. Another benefit, a millennial is working right now, but at some point will be required to retire, the children's education in the future. So your future goals will be easily met. So your stress level will be reduced if you have to go for a mortgage, which is a need millennials would have. You would have a down payment because you would have prioritized saving and investing. And when you consider economic uncertainty, a millennial who is prepared, let's use the COVID-19 experience that we all should never forget. So a millennial working in the tourism sector, any of the hotels throughout Trinidad and Tobago would have been sent home immediately. No upcoming income, and you have your mortgage to pay, you have a loan to pay. What happens? That millennial who had an emergency fund would have been able to enjoy that peace of mind knowing my bills will be covered, my expenses will be covered because I prioritize my saving and investing. So these are some of the benefits: financial security, meeting those long-term goals, and you're able to survive economic uncertainties.
You know, you mentioned long-term goals. So we have short-term goals and we have long-term goals. My short-term goal, I guess, might be to go to the movies. Some people, it's different. Yeah. How do you balance that?
Yeah, and as individuals, our goals differ. Everybody has their unique outset of life. And balancing is something we do every day. You know, I went to the mall on Saturday, and you're looking at a pair of shoes. I'm balancing, do I purchase this pair of shoes now, or do I really hold my funds because I'm also putting funds together to purchase a vehicle. So do I hold out on that? And you know, the impulse of wanting to buy now, we call that instant gratification. And sometimes, and there's nothing wrong with it, but we just have to make sure that we're planned for it. In life, there's something called, as we like to say in unit trust, budgeting is very essential. You need to clearly define your short-term and your long-term goals so that when it is you do your budgeting, you know exactly where it is your resources, where you're saving towards, key managing the expenses, where can you really cut back to achieve these short-term and also these long-term goals.
Some people say, I knew I'd say, but I want to say a lot of people, there's difficulty in saying what can I cut back, because that option of needs versus wants, it's very unclear to a lot of people. So what advice would you have for them to say, okay, this is a need and this is a want?
All right.
Yeah, I would say you need to really assess yourself as an individual, and you would know your life plans. Yeah. Usually the want comes at you impulsively. Yeah. And you need to know, okay, this is the chart, this is the plan I have, and I want all viewers this morning to take the time, challenge yourself this week. Really sit down and map out your daily expenses, your monthly expenses, and that is creating that budget for you. And this is what you're going to use throughout your life in terms of, if I've set certain goals and I budget according to the goals I want to achieve, what are the things I really need to do? What are the things I really need to change to achieve this?
And a quick example in terms of defining that need and want. Yeah. Okay, a millennial mom, your child may need a school shoe, but they need this school shoe. What type of school shoe? And that is a quick example as to need versus want. They may not need a Nike sneakers. You may be able to get a sneakers.
You just need a white sneakers. It doesn't have to be a white.
$150, not $500, for example.
So that's a real life example to those, and school is starting back today.
That's right.
You know, we're talking about starting investing to millennials, but a lot of times people are in debt. You do have a mortgage, you may have rent, you may have, obviously, there are a lot of things sometimes. You may have a soft loan for any other items. Some people are going to look at it, I have enough things to pay, why you want me to take more money to invest now? What do you say to those critics?
And that's a natural concern.
Yes.
You don't need to be debt-free in order to start investing. I would say start tracking your expenses. I mean, Dexter used the word budgeting. Write down, put it on an app, wherever, take it out of your head and ensure you're able to see, I'm spending $200 towards cable. Well, people don't use cable anymore, but maybe you have money wasted on a subscription. When you write the expenses, you're able to now see, oh, I'm wasting money in this area. I'm spending too much on buying bread every week, where I could look at baking. So write it so that you're able to eventually track and cut your spending. Remember, you have to make sacrifices. So delayed gratification is very critical. You're putting off some of the wants in order to enjoy the needs. And another thing you want to do is be true to yourself. What's your level of tolerating risk? And a quick way to know that. Yeah,
because I wanted to ask, you know, how would you identify your risk? How do people know, okay, I can invest, I should invest?
Right, so we're trying to help you to get the money to be able to invest. So we're doing the tracking, and then you are monitoring, okay, if I am to make an investment of $20,000 and that investment should drop in value by, let's say, 5%, 10%, 50%, would I be able to see comfortably? For me, if it's 50%, I'll end up by the doctor. So with that, you're saying your ability to tolerate risk might be low. Therefore, you want to choose an investment that is not high in risk. You need now to manage your debt. So loan payments, you're looking to list them, and I'm challenging our millennials this morning. If you have loans, credit card, hire purchase, list them, and the one with the highest interest That balance, you try to have it paid down step by step. This will free up your money. These extra money now from being committed to your budget and those that you have saved from reducing the loan payment over time, this is the money you're now taking to start an investment. Now let me say quickly, this is not the time to allow lifestyle inflation to get on you. This is where when we get increased money, what we tend to do naturally?
Spend more.
Spend more.
Yes.
So we are not going there. That money is what you're going to use to start that investment.
You know, as we kind of wind down on this interview, we're talking about millennials. We identified who they are and why you should start saving. What are some of the options that they can consider? You know, when people normally think of investments, they think the jargon is just intimidating.
Yes.
Bonds, mutual funds. Do I have a portfolio? Just the jargon itself is a little. It's
Scary.
a little intimidating to some people. How would you demystify that for the young people?
And I would say Unit Trust Corporation kind of takes that burden off of you. Many times investors, they start off saying, I want to buy some stocks, I want to buy some shares, but what do I purchase? They go to a broker and they may just dabble into one company or two. When you come to the Unit Trust Corporation, mutual funds would be the product that we sell, and that's really a spread over different stocks, shares, bonds, different entities, and that's really you being able to naturally diversify your funds from the time you join and you start an account.
Yes, if I should add, even as Dexter mentioned, diversify. What Granny normally says, for those who grew up with Granny, don't have all the eggs in one basket.
Right.
Correct.
So you're diversifying, but you also want to educate yourself. If you're now starting to learn about investment, when you educate yourself, you become a little more aware to appreciate some of the jargons you were referring to.
Yeah.
Wanting to start to invest, you want to know what are the risks that goes with this, meaning, hey, could I lose my money with this type of investment? What timeline do I need to consider? What are the associated costs? Should I be involved in this particular investment?
Yeah.
So educate yourself, diversify.
Also know your risk tolerance. If you're a person that you know for certain every day, every 2 days, you're going to be checking that balance, that says something about your risk tolerance, right? If you're not a person is not afraid to take a chance, and in general in life, it speaks to your risk tolerance. So, as we said, you know, we need to really educate ourselves, do some little reading, know exactly what we're getting into, and Unit Trust Corporation, we've been here for the last 40 years, long-standing. We manage over $25 billion in funds, right? And it speaks to the strength of the corporation and the nation of Trinidad and Tobago having confidence in us. So we're saying, you know, come across the Unit Trust Corporation, let's have a conversation, let's guide you with savings and investing.
So to all the millennials out there, remember that it's not about if you should save, but when you should start saving, and that when should be now, because you do not have forever. And because I fall into this particular group, I can tell you that it is, I started investing when I was in my 20s, and it started off by flukes, but it is something I do not regret. And if you are intimidated by the jargon, if you think it's not for you, everyone is an investor. So go give a call to the officers at the Unit Trust Corporation and find out what they are the options, how you can start investing. And trust me, it is not a lot of money. You can start with any amount of money that you can spare. You would be amazed at sometimes $20 would make a big difference if you're starting an investment portfolio. We take a short break. When we come back, we'll have more for you. Stay with us. This is The Morning Brew. Thank you.